Welcome to Brainfood Bytes. I'm Professor Troy Lewis. You know, every busy season, there always seems to be at least one new tax reporting change. For the 2022 tax returns, that item for individual taxpayers was scheduled to be the increased filing of IRS Forms 1099-K. This form has been used by TPSOs, which is an acronym which just means third-party settlement organizations, to report the receipt of funds paid to taxpayers. Common TPSOs include organizations like PayPal, StubHub, and Venmo, amongst others. Are you like me? Had lots of clients calling you about this 1099-K new form they're hearing about in the media? Well, in truth, the form's not new. It's been used for several years now. But what is different in this year is that the American Rescue Plan Act of 2021 changed the required reporting thresholds. In prior years, only taxpayers that were paid in excess of $20,000 from more than 200 transactions needed to be reported. So many taxpayers never received the 1099-K. But with this tax law change, any taxpayer that now receives more than $600, no matter the number of transactions, for goods and services, is required to receive a 1099-K if paid by one of these TPSOs. This lower threshold simply means that more folks are going to be getting these tax forms. But on December 23rd, 2022, the IRS issued Notice 2023-10, and that notice provided that 2022 would be treated as a transition year, and essentially that the original $20,000 rule would apply for one additional year for 2022. That means that 2022 will be business as normal. Now, taxpayers shouldn't celebrate too much because the notice also went on to say, 2023, the $600 reporting threshold is now going to apply, as well as in future years. The IRS is giving us and our clients essentially one more year to prepare. So how can you prepare? Well, I think the easiest way is to become better informed as a preparer so that we can better educate our clients. In addition to IRS Notice 2023-10, the IRS also issued a series of FAQs, frequently asked questions, FS 2022-41, which answers several great questions that we've had for the whole year and inform us how we are to report some of these transitional issues, such as how do you report proceeds received via Venmo on the sale of a personal use asset that may have been sold at a loss, such as a refrigerator sold at a garage sale. I mean, after all, that loss is non-deductible for tax purposes. How do you report proceeds received on the sale of a sporting or concert tickets through StubHub? Or how about when someone simply pays for a group of friends when they're out at dinner, they pay for the entire bill and then are going to be reimbursed through Venmo for their friend's respective portion of the dinner? That's certainly not taxable proceeds. But yet, if that's reported on a Venmo 1099-K, you can see the complications that might ensue. So all of these situations are fairly common, and my advice is to make yourself very accustomed and very knowledgeable about the notice and the FAQs. Remind yourself, this one-time delay in the threshold is not likely to happen again. Thus, this busy season is a great time to educate our clients about this change and what type of records they should be maintaining so that the filing season 1 year from now can be less stressful for all of us. Best of luck to all of you. Thanks for listening.